Morning, Steve Ray in Chicago with the morning grain comments. Well, the U.S. stock market is closed today in observance of the funeral of President 41. The futures markets, though, and the S&Ps are open, and they're trying to rebound a little bit from yesterday's steep losses. Over in the grains, markets are a little bit easier. There's just been so much uncertainty in the deal or no deal between U.S. and China trade issues. There was one email sent out that one of the key president's China advisors said that the deal was unraveling. We also saw yesterday information coming out of the Midwest that the Chinese were going to come in and buy large quantities of U.S. soybeans, corn, wheat, and ethanol before the end of the year. There was also a tweet by the President of the United States earlier this morning saying that Chinese officials were beginning to restart imports of U.S. soybeans and liquefied natural gas. So just kind of choose your blood as far as which one we're going to see as far as next coming out of the marketplace. On December 11th, we've got a USDA report. Average trade guess for the corn carryout is 1738 and the government's 1736, and there's not a real big range. So not expected to be a lot of changes there. The average guess for the soybean carryout is 945 versus the government's 955. And here again, the USDA said they will not touch U.S. soybean exports as long as there's tariffs imposed on U.S. soybean imports into China. Range, though, 875 to 975. There are some people a little bit higher than that, thinking that the final U.S. soybean exports will be lower than USDA numbers as the window is closing to satisfy or sell beans to China. One of Cargill's top officials yesterday said that that window is closing and he didn't look for any more exports out of U.S. to China. Wheat carryout 956 versus 949, and here again, not much changes on the December market. I think that individually beans are here and they're going to stay here until we know more about the deal and actually see evidence that China's buying U.S. beans or not. Corn market still in this broad trading range. I don't look for it to break out of it until we get ahead into 2019 and just see what kind of acres U.S. farmers are going to plant and what kind of production is going to be next year. Wheat market still has too much wheat in the world. There's a lot of talk about Russia maybe still being competitive in the world wheat market despite their lower crop from last year, and that's going to reduce potentially the amount of U.S. wheat exports there'll be. If next year we rebound from this past year's lower world wheat production, wheat stocks both here in the United States and globally are going to go up, which should be negative to prices. Weather-wise, Brazil is looking for a front to move in with rains at the southern end of the area by the end of next week, which would be beneficial. Argentina also looking for rains in the middle of next week, which is also help as their conditions have turned a little bit drier. So in general, we're kind of on hold, and we'll see what kind of happens as far as U.S. trade in beans is concerned, and just what the funds want to do with their corn and wheat positions. As always, these are my thoughts and not those of ADM Investor Services, and have a safe and profitable trading day.